What is up, everybody? Logan here again with another video coming back at you guys. And today I'm joined with Halcyon again, and he's actually going to take us through some calendar trades. And he had a really good calendar recently with his little group, and those guys were pumped on it. And I got to monitor it a little bit and follow it a little bit, but I was actually in South Carolina at the time shark fishing when they were taking those trades. So I actually didn't catch any of those as far as me getting into them. But it's been 2 weeks since I've uploaded, just have been living life and trading and finally got the time to make a video. So I'm actually really excited to have you back on, Halcyon. And I'm excited to see what you got for us in this one.
No problem. So in the adventures of learning how to structure your process setups and run your trade factory like we talked about, here was a fairly decent one that worked out. Now, this is going to be from a realistic perspective, these don't usually work this well and usually don't sit around in them this long. With calendars, especially when you're getting doubles and triples on it, I'm usually looking to get somewhere between 10 and 20% most of the time on those. And that's typically a 3 to 4 day thing, and you're in and out of them and move on to the next one and wait for the next setup. So wanted to just walk through for me what is like the perfect way to set these up, what I look for when the occasional couple, every couple of them will set up this way. And they're a weekly trade that I will do when the VIX is acting the way it needs to be acting. But I want to walk through just kind of what this looks like, how this worked out. I took all the screenshots off of we screenshot all everything we're doing on this. So I took some screenshots off of this throughout the way and wanted just to talk through it all. So it's always good to look back and see what's what and how it all materialized. All right, so the trade started on May 17, right? So this is May 17 is this starting here. Okay, this candle here, this started May 17. And I want to say it was right around about either 11:30, 12:30, something around 12:30, 1 o'clock-ish is when we took that trade. So if you looked at any of the prior videos, for me, I like to utilize the 65-minute chart. That's what this is. Okay, 65-minute, 90 days, 65 minutes. Gives me a frame of reference for the last 90 days on the SPX, roughly what I can expect movement-wise for this particular index. Okay, so top end of the range is usually the top end of the Keltner channel. Bottom end of the range is usually the lower end of the Keltner channel, and then you can get some standard deviations added on here. I think these are 1 1/4 standard deviation. I'm pretty sure that's right. To just get an idea where roughly the playing field is, right? It's always important to know where are you on the playing field. We talk about this all the time. Don't take, super bullish positions when you're up in the nosebleeds, and don't take super bearish positions when you're, at the bottom of the barrel, essentially. So looking at it from a daily side of things, just so you can see the daily chart, May 17 is right about here. Okay, so we've been trapped in this kind of long sideways, just trendless, choppy market. And obviously, this is in large part, it's been the debt ceiling conversation and the market just trying to figure out where and what to do with that. And so until it's officially done, which essentially I think nobody is really believing we're going to actually default. But until that's actually done, we are, we're sort of captive there. Excuse me. So this is the trade we set up. The idea was we wanted to play some upside up to about 4,200. But really, I was looking for the market to, based on some levels that we had identified, to chop back, to work its way back into like this 4,100-ish range. And so we set up what I would call an unbalanced calendar, meaning that normally what happens, well, one of the ways you can do calendar, I shouldn't say normally, but one of the ways you can do calendars is you can just set them up where you're trying to bracket a particular range. So let's just say, I'm looking at it saying, okay, I think between 41.80 to 41.40 is my target zone I'm working on. I think we're going to land somewhere in there in the next week or two. And think of it sort of like a butterfly. where if you can get it to land right around the price range you want, you make a lot of money on it. Difference is that with the calendar, it has some more vol sensitivity to it, but you can have a much wider range that you can work with. Whereas with butterflies, you got to pin the number. You got to get like that within the point to actually hit the big, the big profit ranges. So this is what this looked like when we set it up. And let's get out of this. Here was the initial one. All right. So if I zoom in a little bit, this was around that time, 4140. This is, I think, took the snapshot shortly after it was set up. So, and this is on May 17. Why is it 523? I don't know. This is May 7. Anyway, this is May 17 when we set this thing up. And so we had a 4155 was the first main tent post, right? So you can see the coverage map that's existing here. And then I tilted it to the lower end because I was expecting some pullback somewhere into this range. Okay, so at 4150 was the other post, and you can see when you're looking at this basically where the range is that I'm hoping to see this thing fall into. So I'm going to change this color and do this, right? And so in essence, you can't see the other one, but it was yeah, you can't see it unfortunately, but it was down here all the way to here. If this is a big if, guys, this is not like this is guaranteed in any way, shape, or form, and the vols don't usually stay stuck and not moving up or down for long periods of time. But if theoretically this trade and the market basically just stayed stuck in a range right here, you would expect that the break evens would be a little over 4,200, and down here on the other end it was right around 4,000. You can't see it. It's a little bit off the screen, and unfortunately, it's why did I snip it so terribly? I have no idea, but I did. Sorry. So anyway, it's around that range was where the break even would be. So as long as I stayed between 4,200 and 4,000, so a 200-point range, I was going to make some kind of profit on this. Now, of course, the biggest profit is made when you stay, if you can get it to hang out inside of a tent post, 4155 being that first one, or 4050. Now, here's an interesting thing from doing these for a while, that once you do them a little bit, you start understanding some more of how the movement is working, is if you can get price to do this during your calendar trade, this is where the big money shows up. And that's why I want to show this example. So you get price to chop, right? It chops up here, and then it falls back down aggressively within say, I would say 2 to 3 days of your expiration, maybe 4 days of expiration. It explodes your volatility up, which gives you massive profit showing up inside of this thing. Now, unfortunately, what you can't see on the side here is that your top end of the available profit was, man, what was that? 20K maybe? It was a pretty good chunk of change for putting in a debit of, in this case, it's cost $6.45. And I did 10 contracts for each post. So there's a total of 40 contracts, 10 short, 10 long on each one of these, which is how you get the shape of this. So if you're curious of how a calendar is structured, in essence, you have two of the exact same strikes, right? 4050 and 4155. And then the long leg is dated further out than the short leg of the exact same strike. So you'll be selling 4050s and buying 4050s, just the dates are a little bit different, long legs being longer dated. And there is a difference then of the cost, in this case, the theta that exists between the short leg and the long leg, and you're banking on eating that up. That's what the calendar essentially is doing from this particular version of it, or this setup that we're using here. Okay, so this was the first set, right? So now let's go back to the actual charts, and let me close these off. Go back to the actual charts and look at what happened, right? So there's two action points that took place here. So if we go forward in time, yeah, clearly I put it on right around here, right? It's 40 and 30, 40 and 40. So it would have been around 1140, right around between 1140 and 1240 is when I put that on, right? Then the market, of course, immediately ran up, right? And we had boom, an explosion. So when I woke up on the 18th or 19th, so I think it was the 18th, yeah, late in the day on the 18th, the market jumps up to the top of the red channel. Okay. Now, in my mind, what I know is that having watched this religiously and seeing this chart all the time, that this tends to be the place where the market is going to slow down. And essentially, it's just a rubber band that got stretched too far. needs to come back a little bit back to center, and then it can stretch out again in very bullish environments that you see happening over and over again. Pushes out, rest, pushes out again, rest, pushes out again, rest, right? But we're not in a bullish environment right now. We're in a very kind of trendless, choppy. So this tends to be the max effort the bulls can push it into, and then needs to rest. And usually the rest is coming back to the mean a little bit higher than before, and then taking another attempt again. Okay. So now what happened, of course, is when we did that, that pushed my threshold on the double calendar to the zone where I needed to make some kind of defending move, because I didn't want to have myself sitting with my pants down to that. So you can see here, this is 41.79. When did I do this one? This would have been the 18th, late in the day. And I'm going to zoom in a little bit. And what I did was just add a small defending position of just a half size calendar that was 42.25s. And that's just in case we had some, disconnect with the market where it was going to push up further. Again, I didn't believe that there was enough juice there to rocket it up further, and also knowing that we are sitting up in here. But I'm also not dumb, so I'm going to defend and leave. And it was cheap. It was very cheap defense. I think it maybe cost $3 to defend it. It wasn't very expensive to put that defending piece on. And so it was, for me, in my way of trading, that was an easy no-brainer just to get some defense on there, right? It makes sense. If you can do it cheap and it doesn't really cost anything. Now, what usually happens is if you add defense into the original position, it's just going to pull down the max profit you can get because there's just more cost inside of there. Okay. So then what happened, of course, is that we keep going forward. Let's go forward, forward. And we did that, kind of pause, rest for a minute, attempted a little push, 42.05s. And then this would have been 5/22/23. This expiration, by the way, if you go back to the other one, this was expiring on 5/26. So the short legs were 5/26 was their expiration, which would be a Friday. Would have been actually last Friday. So we can see we've pulled back here, and now what has happened is the trade. This is kind of the best. This is the unicorn scenarios of calendars, is that you have them set up a little bit below price, which then when price falls into them, what happens is you get the double whammy of VIX goes up, so your option pricing goes up, right? The cost of them goes up, plus you paid cheaper for them, so you get this kind of double kind of whammy happening in your favor, right? So that looked like this. So we took another screenshot in there, and that fell, so we moved up, right? Let me go ahead and get the annotations on here. So we moved up to somewhere around 42.05, right around here. Okay, we added our defense in, which is this guy. And then price proceeded to fall back in here. Now, what happened when it fell in is that pumped the vols up. And now that trade, that it paid $6,450 for, is going for $2,379. Okay. And now I'm in a really good position because I think at that time, that date was 5/23 when that happened, the 41.50. Let's go back and look real quick. Get back over there. So that happens, right? This is around 5/23. So I know I have 3 days left. This would have been on Tuesday before that Friday expiration. And so we're like full on in the body of this trade. You guys know that I have a 40/50 is kind of like the other tempo. So I have a lot of room for this to fall down and not have to do any defense on that trade. So we're kind of in the thick of the main profit zone. So there's really nothing for me to do except sit and wait on something like this. Now I'll tell you what I did, my own mistake on this later on, but I want to show the full totality of this. And we'll go from there in a second, because like I said, even though I've been trading forever, I make mistakes all the time as well. So as the price kept going and chopping, now this is like kind of a sweet spot for us, where it's 5/26. So this is 5/25, which for me, I almost never will hold a calendar longer than the day before expiration. You really try not to be at, you don't want to be in them at expiration. It's not a good idea. There's a whole bunch of reasons for this. Usually a vol crush happens on that day. That front the front volume, the front option, the short option leg is going to get smashed typically on the day of expiration. And if anybody who's traded zero DTE, you know what that like, how fast that can go against you or go for you, right? So this is what it looked like on the Friday of expiration and what this profit turned into. And then I'll tell you what I actually got out of this thing, because it was, I'm still, well, actually I'm not annoyed by it. It was just a bum deal that happened. So here's what it looked like at the end of expiration. Okay. It was at 12,325. This is not end of expiration. This was like first part of the morning on the Friday of expiration. I think that's 526. So we're looking at, it was around 12,325. Again, when it was sitting at this 4115-ish, 4120 range, they're so right in the middle of the body, this whole structure, that it needed to go up. I think at that point, the expected move was nowhere. I mean, it would have been like a 3x expected move before it would blow past my top end. It might have been a 4x expected move, which is just not going to happen unless a swan event takes place. And same thing on the downside. And I'm actually less concerned about the down, because if the down happens, my VIX pops up, right? And that helps me actually in this trade. So I actually don't really care if I'm going to push down pretty hard. So we go down 1%, I don't care, because that's going to push it into this range, which is going to pop up this profit zone as well, right? So here's what this all looked like. $12,325.46 would have been the take if you'd have held on all the way to the bidder end until Friday. There's no way I would normally ever have done that personally. And actually what I ended up doing is I worked on getting out here. This was what I was dealing with, because this was my personal profit targets. Granted, this was smack in the middle and there was no reason to, but that was just my normal profit targets, just running my normal trade factory. Now, what ended up happening is, instead of me walking away with $1,000-ish gain and moving on to the next trade, I ended up taking a $1,000 loss on it. And why is the good question is, so something happened with TOS where when I went to send in my sell orders, I got like a really strange fill on, I wanted them, it was not either the short leg or the long leg, but one of them filled super weird, where it was like, that was not even really close to what the price was. And I got completely hosed, upside down $2,000, what I thought I was going to get for it. So, buyer beware, I suppose. That doesn't, I've only, it's been the second time it's ever happened to me in all the many moons of trading with TOS. Where instead of taking what I was expecting, a couple $1,000 win, I'm taking a loss. And I don't know what happened, if I somehow flipped the market, a market order or what, but somehow somebody got one hell of an amazing fill on an option trade that they were, that I did not realize was going on. So either way, though, the moral of the story is, typically this is what, when you get the VIX acting the way you want it to and price action the way you want it to, this is what calendars can do. And it was a pretty low stress trade. I mean, there really wasn't a whole lot to do other than the one defending move that you put on when it got to around 4,200, which even in itself, that was fairly, sorry, it's 4180 when we actually put that on, typically halfway down the slope. So you're typically halfway down this slope is what you're looking at to add it on. And when it was right around here, we added that on just, to add some defense in there just in case. And so, yeah, it ended up being a fairly painless trade overall. It was pretty easy to just hang on to. Again, I ended up getting absolutely hosed. I'm still not certain what exactly happened, but somehow I got completely screwed on that. But that's not neither here nor there. The point is, from a learning perspective, this is what, when you look at calendars, this is the magical formula for them if you can get it to work out correctly, right? And so let me just really quick review that, and then we'll close this video out. So again, if you're up in these upper channels, right, up in these upper ranges, and you have levels above that you expect really significant resistance, putting a calendar or two that's going to cover a decent, part of the expected move is a really good, it's something that you should do some deep diving on and take a look at. Don't take my word for it. Don't take anybody's word for how these things trade. Do your own research. There's no substitute for that, but take a look at it and see what you see. But what I have found is the best wins and the highest probability of percentage for me with the way I trade them is always finding them in their top end or the lower end of their ranges, and let price move into my big target zone that I have. That for me has been a really good strategy that worked out really, really well back in 2021. Didn't hardly do them at all in 2022. And then again, it's been starting to work again in 2023. So yeah, so that's the kind of gist of that trade. Again, They are very, very forgiving for the most part. Now, where you can get in trouble with these things is vol crushes on these. That is a thing that can happen. You need to be aware of that. Where that's like if you, for example, set one up over the top of this price and you've been sitting in this for the daily is a terrible example right now, but let's say that you set one up over the top of this range here, and then volume, then it just popped up here, right? And VIX started really plummeting here. You're dealing with your VIX is dropping out of the floor on you, and you're trying to put defending positions in front of that, which is typically a losing bet when the VIX is really just plummeting on you. So the next time I have one that actually has a bunch of annoying defending positions on it, or a bunch of or has a really bad VIX fall, we'll post that one so you can see the other side of it. Because I mean, I don't want to give anybody the impression that calendars are just bulletproof and there's nothing ever goes wrong with them, because things do go wrong occasionally. But they're very, very forgiving to work yourself out of them. It doesn't work like a credit spread where if it goes against you, you're instantly showing massive upside down losses. That's not how calendars work. They're truly an income. It's an income strategy. It's not a aggressive account growth. Now, yeah, you can make some adjustments like what I'm doing here, where I'm using some metrics to help me get an idea and gauge where price is going to be moving, so I can try to be in front of it or below it depending on what I believe is happening. But yeah, that's what I got for you today, Logan. I hope this is something that people find helpful. And again, as always, do your research, do some deep diving, play around with them, look at them, and just so you're curious, like 99.9% of the time, my expirations are going to be a Friday and Monday. So Friday will be the short leg, Monday will be the long leg. You can play with changing those around to whatever you like. But for me, I've just done it so many times, for over the years here, that I like Friday, Monday. It's easy to control, easy to, set them up. You can find lots of the option chains that work totally fine for Friday, Monday. So there you go.
Awesome. Well, I appreciate all your time today, Halcyon, and showing the calendars again. And I know, like you said, you didn't trade them a lot last year. There were so many reasons why, besides just the market even being crazy. But I really appreciate you taking the time to walk everybody through them, and especially the trade that you had. And I know a lot of the guys were following you on it that did really well. And was anybody crazy enough to actually hold it to expiration?
I don't think anybody held it to expiration. The only people who would have done it is they weren't paying attention and just completely forgot to look at it. And I wish I would have just forgotten to look at it, going for my normal profit target on there. But and that's one of those things when you get it lining up perfect, where it falls into your zones, especially when, and looking in hindsight, I should have just let it sit there for a long time, because there just wasn't any reason for me to really exit the trade. I was completely centered on it. There wasn't, even if the VIX started falling aggressively, we've been watching recently where the VIX goes up on up days, and so we know that that's not been the situational awareness. I just completely had a brain fart for some reason and was not paying attention, didn't run my trade factory appropriately, and I came out with a widget that wasn't the right profit shape I was looking for. So like I said, everybody makes mistakes. That's the point, is though is to learn from those failures, and learn from those opportunities to improve and hone going forward.
Absolutely. Well, I appreciate you taking the time today to talk to everybody and set up this trade. I do want to get on some occasionally this summer as well. I know I've been credit spread heavy lately, and also looking at a little bit more butterfly stuff too, which, like you said, kind of goes more hand in hand with the calendars, right? Because it's like you can always take your win, or if you let it ride and you absolutely nail the top of the nail with the hammer, it's like you just see a massive amount of upside. So
yeah,
I find that super cool. But I really do appreciate all this. If you guys have made it this far, and you haven't left a like for Halcyon, do it now. If you guys want to comment below, I'd really appreciate that. And subscribe if you haven't already subbed to the channel, because we've been making these videos for a couple of years now, which is really fun. And
that is kind of wild. Yeah.
It's like the only thing that's changed around here is the weather, I'm pretty sure. We're just doing the same stuff we were doing.
And your facial hair, yeah.
Yeah, this took 2 years. No, I'm just kidding. But no, I really appreciate you taking the time to come on and set up and model these trades, because I think a lot of people, and we were even talking about this yesterday, right? When I was texting like a lot of times where as an options trader, you go, why do I even do this? Right? Like there's
Oh
so
yeah.
many variables. And I find that to be something I find myself thinking about a lot of the time, but trading more income generating strategies and more, laid back, where you basically set a trade and then you manage it if you need to. I find that to be like the one thing that does keep me sane when trading options, is like you just can find yourself in a much better mental space when everything does work out for you. And when you're winning consistently, you just feel a lot healthier. So I think that's something too to take away from anybody who's maybe never traded a calendar or has never traded anything like risk defined like this. You may find that this might be what keeps you coming back to the markets and where you find your edge.